back to Coffee and Coverage. I am your host, Nicole, and today we are going to be joined by one of Pinnacle's consultants, Jen. Today we are going to be discussing health savings accounts, also known as HSAs. So some of the topics I guess we're going to talk about is what is a health savings account, how do they work, is there a deadline for when you can use your HSA funds, how much can you contribute, where can I get an HSA, and what is the difference between an HSA and an FSA. So we'll go over a few of those things today, just kind of get started on the HSA topic, and we'll go from there. Okay, Jen, so let's start with, what is a health savings account?
A health savings account is a tax advantage account. So you can, if you have a high deductible plan.
In other words, your health insurance plan has to be a high deductible plan. What does that mean? What does that plan look like?
That plan looks like if you don't have any co-pays for doctor visits. So you go to the doctor visit, you have to pay that full doctor visit in full until you reach your deductible. So usually
different than a co-pay plan. So that would be the difference between what qualifies under.
Yeah. With an HSA, you can make pre-tax contributions. If you are with a group and you have an HSA compatible plan, the employer can take out HSA pre-tax dollars out of your paycheck. But if you don't have that and you're just on the marketplace or an individual plan, then you can find any bank or an HSA account somewhere and you can make contributions there, and then you would have to give it to your tax guy and he can give you the tax break at tax time.
Yep. So to kind of just elaborate on that a little bit. So on the personal side, on the individual side, if you're not with a group, you would contribute to your HSA throughout the year or one lump sum at the end of the year, however you wish to do it. And we can go into details on examples of that later. And so whatever you contribute for the year, that bank or banking institution then sends you a tax form that you then take to your accountant at the end of the year, and that's how you get your deductions and all of the benefits of that account. But like you said, if you go through the group, then they can do it monthly through your paycheck, and that's how you get the pre-tax savings versus the non-pre-tax if you're individual and doing it yourself. So little tidbit on that. But okay, so is there a deadline for when you can contribute your HSA funds?
You would just have to contribute before tax time. So
April 15th, I think, is actually the last day that you can contribute for the previous year.
Yeah.
And then, of course, moving on for the next year after that. So, and then how you can contribute, or no, how much? So how much can you contribute into your HSA yearly?
Every year, the amount changes. The IRS determines that for us. In 2024, for an individual, you can contribute up to $4,150, and a family plan is $8,300. If you're over the age of 55, you get what they call a catch-up of an additional $1,000 that you can contribute.
So let's do like a broad overview of how an HSA works. What are we using our HSA funds for?
You can use your HSA funds to pay your doctor bill. So if you have that doctor bill that you just did and it was $300, you can take your money out of your HSA pre-tax or tax-free to pay for that doctor bill. You can use it for dental visits, chiropractor, vision, anything health-related that either your medical plan will pay for, that you to pay for your deductible, or that it won't cover. So
I mean, there's a lot of, like, I like to use gray area, but essentially, I mean, it's a lot of over-the-counter drugs. It can be for travel for medical reasons. I mean, there's a lot of areas that we could also, I mean, if you're curious what specifically, we could help you to answer those questions. Or you can always find a list online too. If you Google HSA, how can you spend your money or whatever. Yeah. So one more question would be, what is the difference between an HSA and an FSA?
HSA, your funds roll over from year to year if you don't use them. So it could be a really great investment tool. If you don't need it and you don't use your funds, you can really
get a nice savings going.
Yep. Just make sure you save any of your medical receipts in order to take those funds out as a tax-free funds. The FSA, your employer has to have that, and those funds you either use them or lose them. So if you say
you're contributing per paycheck, usually with an FSA, right?
Yep.
At work.
At work.
And then you have accounted for what you're going to spend it on already. And then, of course, the HSA, like you mentioned earlier, we're contributing throughout the year. And if we're not using it, it's rolling over. I mean, all the way up to the age 65. So, I mean, we are never losing our own money. It's just growing as we go, or we use it if we need it for expenses as time comes. So. Okay, so this is just a snapshot of health savings accounts or HSAs. Again, we can dive way more into these as further videos go, but for today, this is kind of an overview of what they are and how they work. So stay tuned next month for part 2 on HSAs, where we are going to find out more about how they work once you turn 65 and go on to Medicare. If you're looking for any more information on HSAs, please feel free to contact us or visit our website. Thanks, Jen, for joining us today.
Yeah, thanks for having me.
So just remember, coffee is optional, coverage is not. See you next time.